Business update now. Data just out showing the U.S. economic recovery continued in the second quarter. Advanced estimate shows the world's biggest economy grew at an annualized 6.5%, but that misses consensus forecast of an 8.5% growth. The government also revised Q1 growth downward slightly to 6.3%. Will Denslow joins us live from New York. Now, will a wide number miss forecasts by such a wide margin?
Well, some analysts look at this as a bright spark for the US economy, considering the fact that GDP is now back to a place that it was before the COVID-19 pandemic hit the United States. Of course, if we cast our minds back a year to Q2 2020, where US GDP fell by nearly 33% at an annualized basis. But looking at this Q2 figure for 2021, it could have been so much brighter. Many analysts expected it to be in the region of 8.4%. Even earlier this year, some people expected Q2 GDP to be over 10% as consumer spending continued to be fueled by those stimulus checks and more people being able to go out as COVID-19 restrictions eased. However, supply chain issues are seen as a huge factor. If we look at the auto sector, for example, those chip shortages really had a huge impact on the auto industry. That is seen as a major reason for this weaker than expected bottom line for Q2 GDP.
So what's the growth outlook looking like for the rest of the year?
Well, if we look at Goldman Sachs's estimates, they have downgraded slightly. They expect Q3 to be in the region of 8.5% at an annualized rate and 5% for Q4 going forward. There are a couple of major stipulations that could have a huge impact on the strength of the US economy going forward. Of course, front and foremost is the Delta variant, what impact that could have on the economy, whether further restrictions will need to be put in place as cases continue to rise going forward. Inflation is another major factor as well. The Federal Reserve have insisted that inflation will be transitory and those prices on goods will begin to ease in the months ahead as those supply chain pressures begin to ease. Not everyone, though, is convinced. That'll be closely watched indeed. We've heard just this week from Fed Chair Jerome Powell. He insists that the economy is progressing. However, he wants to see far more strength when it comes to the US labour market before considering things like easing their bond buying programme or considering when to raise interest rates again in the US.
Well, thanks for that, Will Denslow in New York.